Hello everyone, my name is Mohammad Abdul Rahman and my student ID is BCM3073. In this video, I'm going to talk about my assignment of Finance and Business, which is research on financial market and capital budgeting analysis. So I'm going to start with the introduction, and in this introduction, we're going to understand about the Australian financial market and also going to understand about the financial marketing decisions, research on financial marketing regulations, project evaluations, and sensitivity analysis. So as we move forward, we can see the comparisons of the four key financial institutions, namely the commercial banks, the insurance companies, the investment banks, and the investment funds. And the commercial bank, it comes like Australian and New Zealand Banking Group Limited, and for the insurance companies, it is Insurance Australian Group Limited, and for the investment banks we have Macquarie Group Limited, and for the investment funds we have Australian Foundation of Investment Limited. Moving on, we see a table for the classifications of the these four institutions, which we can see that there are classifications of the share, capital budgeting, classifications, the CEO, etc., etc. Moving forward, we see that there have been four bar graphs given by the dividend payment methods of the four institutions. Having a closer look, we can see that having a closer look at the bar graph, we see that they have been given the 5 years of the ANZ. We see that in 2015, ANZ had the highest dividend payment method, whereas till the 2019 it has been constant. IAF and MQG have been like slightly increase and decrease and changes in their 5 years, whereas in AFI we see that in the year 2016, 17 and 18 have been constant and sudden rise at 2019. And the other slides will be continued by my other group mate. Thank you.
In financial management, we have to discuss about capital management, capital budgeting, capital structure, and working capital management. In capital budgeting, we have to discuss three major key points like association with investment decisions, process of evaluating potential projects or investments, and the third one is ANZ efficiency, assess finance. In capital structure, we have to discuss combination of debt, combination and equity to finance assets, financing decisions, and jet green bond issuance. In working capital management, we have to discuss like the process of managing current assets, current liabilities, uses of bank overdraft, by which we have to discuss about short-term loans as source of working capital. Moving further, I have to discuss about different facts related to listing on ASX, and in which I have to discuss advantage, and the second one issue by considering in different flowing listing on ASX. In terms of advantage on being listed company as a on ASX is like it will help us to generate huge amount of capital, enhance market value of firm, better and effective recognition by which public community will be beneficial, and the issues which should be considered like corporate governance practice, either it may be effective or not, it depends on the situation, and the fear of losing control on the firm, and the third form susceptibility of market conditions as well. Now Naveen and Tian will discuss their parts, so thank you.
Hello everyone, let me talk about NPV of base cost. This graph shows sensitivity analysis. That means it's a recalculation of NPV. Follow this graph, we can see unit sales is decreased by 10%. The NPV is 5286234.2. Follow the next graph. We can see when the unit pace decreased by 10%, the NPV is 443 31955.5 unit. Next graph we can see when the variable cost per unit increase by 10%, the NPV is 52862342. Is the same the first graph. In the last graph, we can see when the cash feed cost per year increase by 10%, the unit is 66062,851.2. Overall sensitivity analysis indicates that NPV of the project will be influenced in case of changes in the inputs, but still it will be project productivity based on this. It can be recommend that the company should invest in new project.
As my friend Rahul earlier discussed about the fact finding on the listing on ASX, like what's the benefit for a company and what's the issues for a company on listing on ASX. Now I'm going to talk about what's the requirement for listing on ASX. First one is, if a company want to list on ASX, the company should have minimum 300 non-affiliated shareholders. The second one is, for a company, the firm needed to have at least 1.5 million of operational capital. Third one is, the firm also required to generate 1 million profit for its operations of over 3 years. And the fourth one is, 2-year audited financial statement is also required if the company want to listing on ASX. Now I am going to talk about what's the steps required to listing on ASX. The first one is advisor appointment. In this step, an experienced team of advisors is appointed by a company to receive professional services related to IPO. The second one is prospectus preparation. In this step, the prospect is prepared, which include the information of rights and obligation related to the share release and the economy of a company. The third one is establish institution marketing. In this step, the institutional marketing related to IPOs is started through meeting the institutional advisor, company and investment bankers. Fourth one is lodge prospects with ASIC. The fifth one is lodge listing application with ASX, and the last one is marketing and offer period. In the last step, the offer is closed, shares are allocated to the interested people, and the trading of these shares is operated. Now the application fees for listing of a company. The initial listing fees is $1,18,388 charged by the ASX for listing on a company under ASX, and the annual fees is $34,654 for the annual fees. Now, what's the requirement on financial advisory service registration? The first one is ASIC's financial advisor register. The second one is people who should or not on the register and update it, information on register, relevant financial product, and the last one is professional standard applied for financial advisor. Here are the temporary difference and risk analysis and project evaluation difference. Like this is the estimation. We can see in the first year expected sales unit is 0, everything is 0, and in the upcoming years like year 1st, 2nd, 3rd and 4, there are 350,000 units sale expectations, and at last after all the calculation we can get the net present value is 6,61,40,530 dollars present value of a company.